Welcome to TradeTheNBI.com. This is John. This report is for the 19th. Happy birthday to Grace, big 11 years old. Well, we talked about what would happen, that we would get towards the 26.98 range and that you would get some stall-out resistance, and I think that's pretty much how it played out. We went up to 26.98, so right in line there. But you can see, this is a beautiful line of cyan under red on the DOC, which is always an indication of bullish power. The fact that we are moving it back above zero, that usually creates a little bit of weakness, just like it did the last time here. Of course, that corresponded with the orange DOC rising above 13.5, which always indicates a soft spot. Now, we felt that that was going to be a reasonably simple reset, simply because we had short-term buyers completely reset. And once they popped back above the 13.5, which they started to do at the open right here, right above the yellow ABM, trailing stop right there, moves above, easy to go long that trade, and boom, here we are. Little rejection at the start of the day here for short-term buyers. We're a little overbought that setup, but should just consolidate within this range. It might break up above that. If there's continued optimism on the tax situation, and once that's done, which is supposed to be coming up later in the day, we'll see how it plays out. If everything goes smoothly, I think that you'll see an additional little pop before some selling to take some gains off of it, because selling the news is more interesting. The euro float continues to support higher prices. Obviously, looking at near 4% growth, if that actually is the number, the beginning of the year is going to look very strong, which means it should be a good holiday season. And that's just going to add to multiples. Plus, everyone's going to be looking for inflation pressures, and that's the next gauge, and that really is going to tell us everything, because as soon as we can start to see some wage elevation, then we'll know that we've actually reached some degree of full employment, which we're not there yet. So it's not been a problem. Yeah, this retrace for TLT should be this, and then a lot more to come as people begin to realize the rate curve is going to be a disaster. And if, it's really going to be a budgetary interesting situation, because you get tax cuts, the potential for significant rate increases going into a growing economy, how that's going to handle the budget and everything. I mean, obviously from a macro sense, the smartest move would be to trail your rate rises and allow inflation to eat into the debt overall. That is the only way to really grow out of the situation, because there's no way they're going to cut spending. The only way to get out of it is going to be to inflate your way out of it, and raising rates isn't going to do that. So we need to be way behind on their rate raising to allow inflation to take control. That is the appropriate way to do it. Definitely harmful to people with their purchasing power, but that's typically how inflation works. Otherwise, there's just no way to service that debt number that they've got, and adding an extra 10 trillion to it just made it pretty much impossible to manage. So there's really no other choice, I don't see. But the market's going to have to work that one out. Obviously, with the inflation and improving numbers, it's a good thing for corporate profits and that. So the government issue is going to be a later on tie-off. Particularly, it's not an issue for most business like it was back in the 80s when this last happened, because you had a tightening of liquidity because the government was using up those funds. You're not going to have that situation right now, because there's just so much excess out there. So oil just hovering along, and I think it's just in a nice, comfortable spot. But I think as that demand curve increases, we're going to see if they're able to match the supply. If so, it will hold where it is. Otherwise, it's going to have to start to rise, which that would also be an inflationary guide. Gold continuing that slow press now at the crossover point. So it's doing all the right things. Not overbought yet, getting close though. So a little more room before it's going to retrace back to this dip below the red line right here. So we can look forward to revisit that, but it's got a little bit more range to go. We might as well check our cryptocurrencies. It started to get a little bit more jagged as it was going through. Couldn't reach that parabolic move on the previous one, and then we started seeing the short signals pop up. In fact, happened very early in the move right here. We ended up with a series of them all reaching the peak before. What happens? Yes, a retrace back to the bottom of our Fibonacci. So this behaves exactly the same as we would expect when looking at our normal readings for the DOC and that, because the same algorithms that are trading all the other items are going to be trading this and moved into it just in a broader scale, but it still reflects exactly the same things. So some nice DOC spreads that took place, and they took place early enough, and none of the highs were even revisited on any of that, and that allowed for a very clean slide down. We're starting to get enough data in there that we should be able to get to tick charts pretty soon, which would make it even tighter as opposed to using the timer. And look at that narrowing range. So this is typically what you see right here, that squeeze, and that's when you expect the retraces to your 50%, and even a little bit lower. In this particular case, we should get a move back down to the 0 line, which is all the way up there at 91.5, so which is 4.5, 5 points away. So not a whole lot of move necessary to fill in that setup, but the fact that you're not getting any new highs, with that comes a stagnation issue. A complete reset of the shakeout, and starting to get some resets, but the steel remaining this high means that you're still overbought. You haven't seen it recover yet, and until it does, like at least down here when it had reset, you ended up making moves back to the highs. Now that you've held that, but you don't have a reset of it, so you don't have enough power to drive it anywhere, which is why it's sort of holding flat. So worth noting that when you see it. As always, though, we're just going to put up any charts that are relevant. This is a nice squeeze that's been straight higher, and if we scroll back for a couple of days, we can see the magnitude of it. This very clean, orderly move, and now we've gone into a consolidation. So up, across, and will we see another up move across there? So far, looks pretty decent from a daily standpoint. We're still overbought, but we'd have to see a pretty dramatic rise in the cyan to suggest that we're going to have any significant pullback. I mean, something dramatic would have to happen with the tax reform not happening, something to that effect. Otherwise, things look like all systems are go. Happy New Year, so to speak. Easy way to describe it there. As always, though, trade well, and look for me in the Skype chat.